Hi there, this is CK Narayan once again on our weekly conversation, speaking about markets, analyzing them, trading them, various nuances that are associated with doing both of these. We have seen over the past few episodes. I think I've done about 4 of them, and if you have not seen the earlier ones, they are available on our channel on YouTube. And if you contact our office, you should be able to get some details also. Now, what I have been discussing in and through those is various aspects related to what is technical analysis, how it is applicable, who should be using it, and what I foresee. Particularly last time I did this video on what I foresee for technical analysis across the next coming decade. And I had an interesting question on that from one of the viewers, which I think I should take an opportunity to answer here, because more people might be harboring that particular thought. What this viewer asked me is that if the coming decade is going to be for options and technical analysis and is going to become more trading oriented, what will happen to all our mutual fund investments and what will happen to mutual funds in general? The answer is absolutely nothing is going to happen to them. They are going to be where they are. They're going to continue to play their role. And I say this because the markets are, quite segmented. The people who invest into mutual funds are a very, very clearly distinct set, whereas the people who are into trading and into analysis of the market over the nearer term is a completely different segment. There may be a little bit of overlap between the two segments, because those who are traders are also people who want to put away money for the long term, and they may be using mutual funds as a kind of a vehicle. So there will be an overlap, but I don't think let's say the options area taking over the market, the trading arena becoming a little more active, is in any way going to significantly impact what is happening currently, the SIPs and the various schemes and the money which is going into mutual funds. That is going to continue unabated. And indeed, given the activity level which is likely to go up owing to options and technical analysis work, owing to the trading nature of the market increasing, I do believe mutual funds can also become active, because they will now have a market which is very, very buoyant in terms of volumes and participation and general activity. So that will actually make the job of the mutual funds a lot more easier. They will have lesser impact costs. They will be able to take advantage of some of the shorter moves, etc. So I think it's going to be a what shall we call it, a symbiotic kind of relationship between the two. So absolutely no worries on that particular count. I hope if this was a doubt which got raised in the minds of people, it should stand answered or erased. This week I wanted to answer another question which got put to me in a different conversation I was having with somebody, and this person asked me as to how do I get more out of the market, right? How do I, make more money, be more efficient, etc. So I was thinking about the answer, and then it struck me that, and I gave him this answer also, and I said what you really need to be is be more productive in the market, right? Now that might seem like a cliched answer, right? But then, like every cliche is a truth, this is also the truth. So let's go and see what this more productive business can be. So I would think if you want to be more productive, then this needs to be divided into maybe 3 areas. First is you got to stop all the non-productive things that you're doing. That's the first thing to do. The second thing to do would be to start doing more productive things, right? And then the third item to do, which is like a kind of an icing on the cake, is to become super productive in certain areas of your life. Now, it stands to reason that you cannot be super productive in every area of your life, not unless you really get elevated to that level, which most of us don't throughout our lives. But we can be considerably more productive in more areas of our life. And here I am not talking about life in general, where also this would be applicable, but life in the markets, which is largely about analysis and trading. So let's first examine this issue relating to non-productiveness. Now, how are we non-productive in analysis and how are we non-productive in trading? We'll address both these. See, you become non-productive in analysis when you go all over the place. You do not have a fixed idea of what it is that you should look at. And here I am largely talking technical analysis because that is our area of focus and area of expertise. So within technical analysis, or indeed you can club fundamental analysis also. Now both fundamentals and technicals, if you take all the areas within it, it's like a huge jungle of variables, right? And if you don't watch out, there is this real big danger of getting lost in that jungle. And once you get lost in that jungle, then you go down a pathway which always gives you a if-then kind of answer, right? Every conclusion that you come to or every deduction that you make will always be, if this happens, then this will happen. So if you have only a series of if-then statements at the end of your analysis, then it becomes very difficult to take answers because you do not have a definitive position. So what you really need to do is cut out all these if-then statements, because if-then statement is, fine for writing a report or giving a very guarded answer. But when you are trading for yourself, when you are investing for yourself, if-then doesn't help, because if-then is an enemy, because you cannot be in two minds that if such and such thing happens, only then I will act, which would then mean that you will have to develop oodles of patience waiting for that if situation to appear so that you may act on it. But if you are going to be active and you wish to be active on a daily basis, then what you really need to do on the analysis front is to structure your analysis in very specific steps, right? There has to be very specific steps which you shall go through, so that at the end of this analysis process, fundamental or technical, at the end of the analysis process, you have more definite answers. Now, what are these answers that we are really looking at? These answers would really be probability settings, right? What are we really looking at with analysis here in the markets anyway? We are setting probabilities of certain events happening more with a greater chance as compared to other events happening. So we are engaged in analysis with probability setting. So when you want to eliminate non-productiveness from your persona, from your habits, then what you need to do is structure your analysis format. So this will require that you create a structure. If you do not know how to create a structure, you'll have to take the help of some experts. Now there are enough experts available who can tell you how it is to be done. You can probably read about it, what's a good analysis structure in technicals, and we have taught that many times in various programs that we do. So if you have been part of our training program, you can look up the earlier videos or maybe get in touch with the office and we can give you a certain structure. So once you have a certain structure, those non-productive meanderings around various sets of items which are there within the analysis framework, you will stop going down those roads and therefore you will not waste time. Now we got to remember the criticality of time. Analysis is such an elixir that those who love it, they can just keep on drinking that potion endlessly without ever having to come up with a solution. But a trader cannot have that as one of his problems. When you come to trading, what is the non-productiveness? The non-productiveness is chasing down every single trade that you get. Now you may get these trades from television channels, you may get them from WhatsApp, you may get them from trends, you may get them from various sources. If you simply keep chasing all of these down, then that will become a hugely non-productive activity. Why? Because three of them are going to deliver, then the other three are not. So you will keep doing this up and down, and there will be a lot of activity, but there will be no results to show at the end of it. So chasing down various tips and items like this is one definite non-productive work which you should eliminate. Now, how do you then eliminate this? We will shortly come to it, but another non-productive way of doing trading is doing too many trades. I'm not saying that you should not do many trades. What I'm saying here is that you must do many trades when you're skilled at trading, not when you're a tyro, not when you're a novice, right? A novice trading too much is guaranteed to failure, and it'll be hugely non-productive work. Again, like I said, lots of activity, maybe you'll have some fun doing it also, but no results. So you can, if you are engaging in too many trades, what you need to do is maybe cut down on them and then take only select trades. Now, which are these select trades? These select trades will come under the category of being high probability trades. Now, how do you get high probability trades? High probability trades will come to you only if you have a process for selection of trades also. So just like you have to create a process for analysis, you also need to create a process for selecting stocks. Now if you go down that path, create a process which will generate nice setups, out of nice setups, which will then create high probability trades for you, then you will automatically become more productive. So this is another area that you need to eliminate. How to select them, where to select them, that we will come to in the productive part. So these two areas you should definitely look at in analysis and in trading to eliminate the non-productiveness of your persona. Now let's move on to the productive side. Now in the productive side, it is only a kind of an extension of what I said earlier. If you eliminate non-productiveness by creating a good structure, how do you convert that into productivity? It's by just sticking to that process that you have created, whether you created it for analysis or you created it for trading. The whole purpose of creating a process is then to work that process, to run it. And to run or work that process, you need to develop a little bit of discipline. Now, discipline is not something that you can go to a shop and purchase a kilo of discipline that will start working for you from tomorrow. Discipline is something which has to come from within. It's an acquired trait. Nobody is born with it. It's an acquired trait. So you need to acquire it. Sticking with something. Now, why do people all make this resolution at the start of the year to lose weight? They join gyms. Now, they don't stick with it, right? By January, the gyms are full, but by February, they are all empty. This is a known fact, which is why the gyms always sell you annual packages. So people don't stick with the process that they have initiated. Now, productivity demands that you stick with the analysis process and you stick with the trading process, so that these two things, if you just stick with the process, you will become more productive. Your analysis will be more pointed, telling you which are the high probability setups. Then your trading process then will have multiple time frames. So your analysis can be, let's say, for example, out of your let's say your daily charts. Now, if you take your daily charts and it gives you a setup and says that stock X or stock Y is a buy or a sell, then as a part of your trading process, now you got to fine tune it down to a buy or a sell. Now that can be done with a lower time frame chart. So this is something we cover in our training programs. I actually call this having a chart of choice. The chart of choice is where you do your analysis, let's say daily. Then there will be a chart of perspective, right? A chart of perspective will be one time frame higher. That will be, let's say, your weekly chart. This will give you an idea of what the bigger picture is. And then you'll have a chart of execution, which will be one time frame lower. So if you take, let's say, a 30-minute chart or a 15-minute chart, whichever, and use that for fine-tuning your execution, then these two things will most definitely make you productive. And once you are productive, then you are on to a road where things are going to become certainly much better. And if you just keep on practicing that and running that as a process, you will definitely step forward into becoming super productive. Now let's move on to super productive and see what that can be. Now what is super productive really? Super productive is when the normal things that you do are being done anyway. Now you got to do something extra. Now what is that extra you can do in analysis and in trading? See, everybody is focused only on finding that particular sector, that particular stock, this point of entry. That's the, these are the things mainly people focus on. But what you really need to focus on, in addition to all those, is how do I control my trade and how do I control my risk? How do I manage them? Risk management and trade management are critical areas of success in trading. So trading is not just about doing good analysis and picking the right stock. That is not going to solve the issue completely. The trade has to be managed well, because as soon as you take a trade, something completely unplanned for could happen, which may not really upset your analysis or make it negative, but which may require that you handle that particular trade in a slightly different way than what you had originally envisaged. So trade management is an area of expertise. It's an area of nuance within the marketplace which people don't really learn at the start. They're all so much hooked up into analysis, technical, fundamental, any other. They are so much hooked up into getting the right information. They are so much hooked up into entering the stock early or at the right price and all that, that they completely overlook this very vital aspect of risk management and trade management. It's a big topic and it's not something that I can actually cover in the matter of few moments. I just wanted to highlight that risk management and trade management, if you were to get that right, then that will be the super productiveness part of your entire persona. So when you take all of these together, good structure for analysis and a good structure for trading, then you move on to working those processes by developing a little bit of discipline. How will you get the discipline? You must first have faith in the process that you have. Faith, according to the good books, faith is a belief in what I know not today, so that tomorrow I will know what I had faith in yesterday. So you got to start with faith. Everything begins with faith. So create a process and put your faith in it. And then this faith will enable you to continue on the path of belief. It will create within you a belief that if I follow this process, things will work for me. So that faith has to be there. So once you get the faith, it will help you to work these processes. And once you have come onto the productive path and then you are doing well in the market, then you can go to the super productivity level, where now you bring in elements of risk management and trade management, and then you can be on your pathway to becoming a super trader or a super investor. I hope you enjoyed this little session of a talk, and I hope I have answered the person who asked me this query. Let's meet again in future episodes of this weekly conversation, and I hope you enjoyed it as much as I enjoyed presenting it to you. Until we meet again, goodbye, stay safe, stay healthy.